Hello everyone, welcome back to another weekly review. This was the economic calendar for this week. So we had news pretty much every day, but Wednesday it was a holiday, so it created a lot of weird trading for the week. Usually the day after a holiday can be lower probability. So Thursday was not the best day to trade, but Monday, Tuesday, and Friday were still pretty good. Then you go on to, one thing I want to mention is the NASDAQ had a contract change for its futures. So we went from the June expiry contract to now we're on the September expiry contract. So because of that, usually it creates a lot of volatility, especially towards the end of the week as we get closer to the expiration, and usually after it expires, there's it didn't happen this time, but it's like a known thing in the industry that sometimes the afternoon session will start to move a lot, or can move a lot on the days where contracts expire, because they expire around like before 9:30 open, I believe, and or around 11. And so investors usually wait until after the morning session to roll over their positions into the market, is what I heard. But I always find that there's just more volatility throughout the week on these contract change weeks. So here's Sunday. What I was saying, here I'm calling the NASDAQ inflation because this is kind of something that, a theory I guess I came up with, but all the growth here is not real value growth, it's just inflation. Because if you compare these stocks to gold, you see it just moves sideways, or doesn't really go up. So it's just inflation. That's how the market caps are valued, by inflation, by how much money people have, all inflation. So I'm just calling it inflation. But I said, it could go up to 20K. This would be a big week if it reaches 20K, and I would expect this level to act as some sort of resistance, because 20K is a big level. It's a nice round level, so it makes sense that when it gets up there, you probably have a lot more people maybe taking profits, or maybe people think 20K will be held. I don't know. Nice round numbers tend to temporarily create support or resistance. So I said I think it's allowable to see some down close candles this week. I wanted to see down close candles at the beginning of the week and make a run lower to this low here, which did happen, but this happened on Thursday at the end of the week. Instead, we drew higher and then went lower. I prefer to see go lower and then higher. So I also mentioned the bonds continuing to go higher. I mentioned that last week, how they were starting to go higher, and then same with the dollar. So the dollar and the bonds are still trading higher. This is how they looked at the beginning of the week. But I was watching the dollar and I see that we've traded beneath this short-term low there. We've gotten above these relative equal highs here. We retraced. We've already expanded. So now dollar should be in the process of really expanding higher towards the highs. And I believe this is, basically what it did. It just continued to trade higher this week. Same with the bonds going slightly higher. Now for Monday, a buying day occurred. It just went higher, and there was a 4-hour order block that supported price in the morning. Price dipped down into that down close candle there. And this is up into a big premium, but it was still pretty nice because overnight just kind of consolidated. And you can clearly see how, as it consolidates overnight and the midnight opens there, on that down close candle right there, price dips down beneath at around, I would say that might be 9:30 open. It dips beneath all that consolidation, and then it runs higher, as is very easy accumulation, manipulation, and distribution. The 15-minute chart, as this was occurring, built up liquidity. So notice the trend lower, the lower highs leading into that down move. As we start to trend lower, it gets harder and harder to continue trending lower, because there's a lot of liquidity that gets built up at the highs, and so price is going to be looking more to trade to where liquidity is, which would now start to be more at the highs. right? We dip down beneath the relative equal lows or the overnight consolidation, and we create a little bit of sideways price action before going higher, using that 15-minute reclaimed order block as support. And I'm using the wicks here instead of the bodies. Usually I use the bodies. You can use the wicks or the bodies. Bodies more sensitive, but sometimes I use the wicks if price doesn't reach the bodies. But this was a 2022 model. We had a Judas swing down to the bullish order block on the 4-hour chart beneath the overnight consolidation. This was the manipulation, which created the market shift up there. I don't always need to see a market shift, because if I know that liquidity was taken, that's all I need. The market shift only is a market shift because liquidity was taken. Without liquidity, the market shift wouldn't be a market shift. So I just look at, is liquidity taken or not, and I try and buy before the market shift sometimes. But the 2022 model, fair value gap, price comes back into it, and then trades higher from there. Through all this low resistance liquidity, right, the trend, and consolidates above the high, but then continues to run higher. And then that's kind of surprised me how high it went. I didn't expect it to go that high. And this is the 1-minute chart as a reference. And you can take a look at that if you'd like. No, this is so Tuesday is the day before the holiday. There was, I believe the news wasn't that crazy on Tuesday. It was just retail sales, so that one's all right. It's still gonna provide a little bit of volatility, but daily candle did consolidate, and I said how it's possibly preparing a retracement, right? So we saw kind of a sideways candle, and we had relative equal highs here, and I was noticing how price, it failed to get above these relative equal highs overnight at 9:30. How it made an attempt, or maybe this 8:30 news made an attempt. It, most important thing is it traded and made a new daily high. It did not quite get past the previous day high, but I'm mainly looking at that high there, the current day high, and I'm looking at how London session traded. In my highlighter within this area, within the high there, that traded above the current day high, so above the Asia session high. And then I was looking for the Asia session low, and then I didn't care what it did after that. So we did see it trade down to the Asia session low, and this is after trading. Oh yeah, this is what I just explained. In the morning, there was a 15-minute fair value gap that created the market shift here, and because the 8:30 news had kind of went higher and then dumped, so I kind of am ignoring that wick, but I just see 8:30 news just kind of trend lower and leave a fair value gap. I'm waiting for 9:30 to see what it's gonna do, and then there's 9:45 news, and it was 10 o'clock news, new existing home sales. Wait a minute. Yeah, no, there was no news actually at 9:45 and 10. But I was waiting to see what 9:30 would do, and after the first 15 minutes, we kind of chopped around a little bit, and I'm watching this 15-minute fair value gap as my higher time frame level that should resist price. You see, I did take a trade on this day, and my stop was above that 15-minute fair value gap, not expecting price to go back and fill this whole thing since it failed to do so here. And well, I want to see the sell side delivery. We also have that up close candle there. We have up close candles here. So I thought if it's gonna fill this whole thing, it would really take a lot to do so, and I thought it was very unlikely for this gap to fill. And so that trade, that stop is right above that 15-minute fair value gap. Other thing I was looking at, which got me into this trade, was a 5-minute short-term low. So as price was drawing lower, I wanted to see a 5-minute short-term low be formed. So you see we've retraced, we formed this not short-term low, short-term high there. And if you look at this whole price action from the 9:30 open after this high here to the to this point there, we didn't trade above a single 5-minute short-term high, and we did so there. And most importantly, we did trade above that short-term high, but the bodies kind of didn't really, like, this isn't really convincing. This is more trading into the 15-minute fair value gap. So we didn't touch 15-minute fair value gap, but we did see the bodies kind of close above this short-term high. And then I'm highlighting this up close candle because I'm saying that I was waiting for one of the 5-minute candles to kind of close and not be like this huge candle, because I want to anticipate the next candle to form it as and leave it as an order block. So the next candle opened up, traded higher above that previous candle. No. Alright, so Tuesday, I said that the daily candle took a bit of time to consolidate, and it was possibly starting a retracement. You see, we had an inside day, and the momentum, it reached 20k. The momentum slowing down. It's possible that it retraces and consolidates around 20k for a little bit. Maybe it might start a bigger retracement, but that's just what I had in mind. So I noticed here how price failed to trade to new day high. Now I'm ignoring this wick here. I'm ignoring that. I'm mainly looking at the high that was formed during London, where my cursor is, and I'm noticing how we failed to get above that high. And then what I am looking at is the Asia high, so the current day high, and I'm looking at how we made a new day high here above the Asia session high, and we started to look for Asia low, and we 8:30 opened up, went up really quickly, and then went down really, really quickly. So I know that, okay, the delivery, the algorithm, 8:30 only went up here to stop out the early sellers, and then quickly resume to what it's doing, which is trading the sell side liquidity. So I wanted to see a run down the sell side liquidity, and then I didn't care what it did after that. But we see there's the order block here that's supporting price, and we have a market shift off the order block, which there's could be a market shift there, and you can use that order block and ignore the wick. But I'm seeing this market shift because it took liquidity with the 8:30 news, and it created a 15-minute SIBI. I didn't expect the SIBI to get filled because there was a lot of levels in this area that I thought could resist price, and so if I saw a 5-minute short-term high be traded through, I'd immediately expect displacement on the lower time frame, like 15-second, 30-second, 1-minute fair value gaps lower, which would lead into a bigger run lower. So on the next slide, you see I'm waiting for 5-minute short-term high to break, and then this is a turtle soup. I waited for this candle to form to see how the 5-minute candle that closes above this high closes, and it was a very small candle. It was failing to, obviously you see it did fail to go up, but I expected this to be the high because as we traded above this small candle, I knew that it was in a big premium. It was close to the 15-minute SIBI, and I said it's possible that this becomes an order block. It might continue to trade higher a little bit, so I had my stop right above that 15-minute fair value gap, and it didn't. Instead, it stopped there and it drew lower very quickly, very aggressively. Then this was used as an order block inside this 5-minute fair value gap, and it continued to draw to the sell side liquidity some more. So this is the trade that I had taken on the I recorded it for the Tuesday. You can go look at a more in detail explanation as it's happening of why I took that trade, and I also was looking at how that fair value gap, the bodies were resisting. So this is something else that kind of got me into the trade, and I didn't wait till see if it hit that 15-minute SIBI. I noticed the bodies were being supported, and I saw that this could just be reaching above these these short-term highs, and so I went in on market as it was above that short-term high near the 15-minute SIBI. And then yeah, so Wednesday was nothing, so straight to Thursday. Thursday opened after the holiday on Wednesday and traded lower quite significantly. All right, we actually went lower quite a bit. The only thing that there was really nothing that I liked. Like I just did not like this. See, like we opened up at midnight and just went lower. There is no manipulation. If I look at here, there's no Judas swing. 9:30 does open up and kind of send it higher a little bit. It will sends it lower and then it kind of runs it higher into this 50-minute consequent encroachment inside of a 15-minute fair value gap, which finds resistance there. And then the 5-minute chart, we have a 5-minute short-term high that gets taken out. So there's enough things that you can use to go lower. Now, contrast that to Tuesday's trade, right? If we close above that 5-minute short-term high, I see a big 5-minute up close candle. Do I expect the next candle? Like, what are the probabilities the next candle is bearish enough to close down here? I'd rather wait till I see that displacement. But you see how we create that small 5-minute short-term candle? It's obviously buying is slowing down, and the algorithm is starting to switch to lower. If you go down to the lower time frame, you'll probably see like an initial run lower and a breaker set up, and then a run above that breaker, and then displacement. So you'll probably see accumulation, manipulation, distribution on those lower time frames, which is what creates these small, but small but still having a lot of body, small beefy 5-minute candles. And then this becomes an order block. Price uses it as resistance and continues to draw lower. But really, other than that, like, there's nothing else that I really liked. And nothing else I would have taken. I didn't really pay attention to price much Thursday because it was not really doing anything that I woke up and I saw, okay, I want to take a trade on this. Like I wake up and I see like price is already rejecting. I look at, is 9:30 going to make another run higher above these highs or above midnight open? If not, then there's really nothing I want to do. 9:30 dumps, and then I just kind of stop watching it after that. But Friday was really nice. I did really like Friday. It chopped up a lot of people. I think that was its main purpose. I mean, there wasn't really anything it was going to reach for on the daily chart, and so it just kind of traded intraday. Right, choppy price action. We had midnight open, which made it run lower, and this run lower from that high to that low took out this previous day low during midnight, and that high left the high of the day, taking out the Asia highs. So this right here is a dealing range, and now we're starting to trade inside that dealing range, which creates consolidation. So overall, you can see that there's some consolidation with all these candles. We trade beneath that low, make a third low, and then we run higher back to midnight open. So this was a market maker buy model. So you see a closer zoom in on the 15-minute chart of that consolidation. Those hourly candles side by side. Right, that's this whole price action there. And you have this run lower down to the low there during London. And this occurred during 9:30. It was a Judas swing lower. You have your relative equal highs by side liquidity. And then we set up to go higher. So consolidation, 5-minute chart, we start to run lower after trading above some short-term highs during the 9:30 open. And we don't really meaningfully trade above that, so nothing really to trust. It's 9:30 open anyways. It's volatile. It makes its Judas swing, initial attempt higher. Now at the time of this occurring, I was telling myself that I didn't really like how clean it was, because usually I like when we come down, we consolidate, and then we run lower. So like we did here, we came down initially, we started to go up a little bit, and then we came right back down to stop out anyone buying early. That's what the algorithm does all the time. So that was just too clean to me. I didn't see any short-term highs that we took out. So I waited a little bit for a retracement because we hadn't taken out any short-term lows. So we did see, I said short-term highs before that, no, short-term lows. And we did see a deep retracement, which created the short-term low, which was traded beneath. And then we saw another expansion, and we saw just slightly trading above to the buy side liquidity. Right, so I was using that as my order block, not this. I was using that as my order block. Now, whether this is the order block or that is the order block price refers to, doesn't matter. The reason I'm using that order block is because we saw that short-term low get traded too. And I see that as just liquidity with the higher time frame sell side liquidity taken we have this pattern with the short-term high getting traded to, and that to me is enough to see or to start looking for trades to go higher. So I did, take this is a 4-minute inverse fair value gap. No, this isn't. This was in the morning, with this initial run higher. So I should probably remove that. But this is just for reference, like to show you what what that blue zone is. But this is the trade that I wanted to take. And I didn't take it because I had already taken something Tuesday, and because today was the contract rollover. I was seeing a lot of people two-sided, and higher time frame looked not really. The higher time frame wasn't really showing me that we were gonna expand somewhere. Like, yeah, there was the consolidation up here, but I preferred to go play basketball, to be honest, that day, and not sit here in a trade after 10:30. So I decided to go do that instead, because there's opportunities every week, every day, and it never stops, right? And I had other things I wanted to do that morning instead of being in a trade, so I went ahead and did them. It's that simple, but it did still work. Like, it came back down to the inverse fair value gap, the 4-minute inverse fair value gap, traded beneath the short-term lows on the 5-minute chart, and then it traded higher, leaving that 5-minute order block. And it would have been 60 points holding it, so that's more than enough. I would have only looked for 20 points, so I would have probably got profit there. But yeah, hopefully you understand well why I took this trade, right? Because we had the consolidation and the relative equal highs up here. We had traded beneath this sell side liquidity, this London low, during 9:30, which created a Judas swing, which had also traded beneath the previous day low. So it was becoming very hard to keep going lower. And from the hourly chart, I didn't really miss anything big, but there was a decent move up to the midnight open for it was probably in total like almost 100 points. Actually, it was about 100 points, yeah. So that's and then after that we got this little reversal. You can see in the afternoon we get that short-term high near the buy side liquidity. We get an initial run lower, creating a fair value gap. People might be short on this. They might initially see it, they're making money, and then comes right back up. The resistance traders, because you think about how market comes up to these relative equal highs here, and then we have another rejection, leaving this big down close candle in the 15-minute chart, and people then see this start to really close inside that fair value gap. They're probably thinking it's going to be an inverse fair value gap, and they're probably getting scared out of longs. But then you might have some people that go short, but then price comes right back up to stop them out, clear up all these relative equal highs, and that's when it goes lower. Because then people at that point, after having it close up here, they're going to think that this is now going to be support, that it was resistance and now it's support, but no, boom, it runs it very easily. Support and resistance is not real. It doesn't exist in the way that a lot of people think that it does. And yeah, that's all for this week. So thank you very much, and good luck next week.